If you look at the current run on the dollar, which is being instituted by China and Japan, liquidating their treasuries, not buying as much, that's the same exact methodology, because that's the foundation of the currency, that was happening with the gold rush or the run against the dollar in the 60s. So the similarities are all there. We are converting into a new system, but this one is actually bigger.
Exciting developments in international financial markets are signaling a remarkable transformation in the global monetary landscape, reminiscent of historical shifts that have influenced economic policies for over a century. Lynette Zang, the insightful founder and CEO of Zang Enterprises, observes that current trends mirror the skepticism toward the dollar seen in the 1960s, but with intriguing modern implications. This analogy is particularly fascinating when we analyze the recent adjustments in US Treasury holdings among major economies. Japan, the largest foreign holder of US Treasury bonds, has adjusted its portfolio by reducing its holdings by $3.1 billion, totaling $1.0988 trillion in November. This change follows a brief increase in August and showcases Japan's enduring prominence since overtaking China in June 2019, reflecting a dynamic international realignment. China's strategy around its U.S. Treasury holdings reveals a thoughtful shift in managing its foreign reserves. The gradual decrease in Chinese holdings appears to stem from two key factors: the evolving relationship between China and the U.S., and a concerted effort to diversify its currency reserves. Notably, China's increased allocation toward gold signals an exciting move toward broader asset diversity. As we navigate this transformative phase, we see striking similarities to the monetary shifts of the 1970s, but with an essential twist: the rise of digital currencies. Zhang suggests that cryptocurrencies can act as a vital stepping stone to bolster public confidence in digital financial systems, paving the way for a smoother transition to central bank digital currencies. CBDCs hold the potential to revolutionize the monetary landscape, offering benefits like enhanced transaction efficiency and improved financial inclusion. While they signal a significant transformation in monetary control, they also present exciting opportunities for innovation and growth in the international financial architecture. The future looks bright as we embrace these changes. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
You know, I was a child. So what I see war. So a lot of geopolitical turmoil. I see very high inflation. I see markets that so want to implode and go down and would were it not for this, right? I see civil unrest. I see the transition into a new system, which is what was happening in the 70s, right? We're going from at least a quasi-debt-based system into, or quasi-gold-backed system into a fully debt-based system. And look, they know how to make these transitions. And the way that they do it is they keep things looking as normal as possible. And I really should always have these organized in a way that I'm looking for it. But, you know, they know how to make these transitions. This is a $20 bill. This should be 1969. So this had a level of gold backing in it. And then here, nope, that's not it. Here it is. Here is a $20 bill that is 1977. They look any different to you?
No, they look exactly the same.
Exactly. That is exactly accurate, because I didn't know, living through it, when Nixon took us off the gold standard and disallowed the rest of the world from converting their dollars into gold. There was a run on the dollar in the 60s, right? That's another thing that's so similar. If you look at the current run on the dollar, which is being instituted by China and Japan, liquidating their treasuries, not buying as much, that's the same exact methodology, because that's the foundation of the currency, that was happening with the gold rush or the run against the dollar in the 60s. So the similarities are all there. We are converting into a new system, but this one is actually bigger than the one in the 70s, because you were still going into, like you said, there's no difference between these two.
Right.
except one had a quasi-gold backing, the other had a full debt backing. Well, they're doing the same thing with cryptocurrencies. And what they're making it look like is the same as this, as gold, right?
Right.
It's not. They have two different functions. This is proven. This is speculative. But in order to go into the CBDCs, they have to have enough adoption and people feel comfortable enough with this. Then it makes it an easy transition, just like flipping this was.
The United States faces an unprecedented fiscal challenge as government debt reaches historic levels, prompting renewed discussions about monetary policy and financial system stability. Financial expert Lynette Zang analyzes this situation, which highlights a fundamental shift from historical monetary frameworks that once provided natural checks on government spending. The latest Congressional Budget Office report presents a sobering fiscal outlook. Projections indicate a $1.9 trillion budget deficit for the current fiscal year, with cumulative deficits expected to reach $21.1 trillion over the next decade. These figures become particularly concerning when considered alongside the existing national debt, which has surpassed $36 trillion. Treasury Secretary Janet Yellen's recent announcement about reaching the statutory borrowing limit adds urgency to this fiscal situation. The Treasury Department has begun implementing extraordinary measures to prevent a potential default, underscoring the immediate challenges facing the nation's financial management. Zhang's analysis draws attention to a critical historical contrast. In previous eras, the convertibility of paper currency to physical gold and silver was a natural constraint on government spending. Let's get back to the interview.
Because people have been so far removed from sound money,
Right.
which is physical gold and physical silver, gold the primary currency metal, silver the secondary currency metal, that I know that they're definitely trying. But I also know just as important and maybe even a tad more important than that local community development is the global community development, because we have to take our power back.
Yeah.
When we could walk into the bank with one of these and walk out with one of these, that it forced fiscal responsibility. And it created power in the public, because if you didn't like what they did, you just pulled the gold out of the system. And hey, that created restrictions around what governments could do. But once they took that away from us, then, I mean, what restrictions do they have? They have no restrictions. Look at it. It's ridiculous, the level of debt that they're growing. It's just all of these political promises and scratching backs and doing all of this. I mean, at what's happening, and not for me, because as we determined earlier, I'm old, right?
of course.
So I'm only going to be here, I think, another 30 years. But we have children, we have grandchildren, and what they want is to go full circle and take us back to that feudal system where you just have a few that own everything and everybody else that has to rent. Well, tried and true is where I'm at, because it's more than just protecting your purchasing power. We are transitioning into a completely new economic, financial, and social system. And that means that we have to have a lot of upheaval. So to protect your purchasing power, what's been proven for thousands and thousands of years is silver actually maintains your ability to purchase at least the same goods and services over time. Gold expands that. So you need to really have a foundation of sound money in any portfolio. Even if you are going to take more risks, you need to be appropriately diversified. But it's so much more than that as well. You need to be in a position to sustain a reasonable standard of living. And so that means that you need security. Yes, you need a foundation in sound money. You got to have that. But you also need food, water, security, barterability, wealth preservation, community, and shelter.
The shifting dynamics in the global gold market underscore a profound realignment of influence from west to east, driven by strategic accumulation, evolving trade infrastructure, and institutional integration. As emerging markets continue to challenge traditional pricing mechanisms and expand their foothold, the precious metals landscape is set to reflect broader geopolitical and economic transformations. This transition period presents unique opportunities and challenges for market participants worldwide, highlighting the importance of adaptability and foresight. What implications do you see for global trade and financial systems as Eastern markets gain dominance in gold pricing and trading? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.